Well, hello everyone, and welcome to your Daily Five. I'm Joe Duarte, author of Options Trading for Dummies 4th edition, which is now available, editor of Joe Duarte and the MoneyOptions.com, and author of the Everything Investing in Your 20s and 30s. If you like what you see today, consider a trial to my website, Joe Duarte and the MoneyOptions.com. Well, we got a lot going on, so let's get right to it. As always, we're at the edge of chaos, and today I want to talk about whether you want to buy the current dip, and there's 5 techniques on how to help you do it. So as usual, first thing we do, number 1, we have a plan. Let's have a plan for bull markets. We always talk about this, but it's important to go over it over and over again so that it's cemented. We talk about momentum in bull markets. We talk about don't fighting the Fed. Don't fight the momentum. Don't fight those trends on the grounds. You want to stick with strength in bull markets. And you take those profits at 20%. And you don't let those winners turn into losers. Use good sell stops and always look for possible winners in areas where you normally would not find them. And always manage your cash wisely, which means please don't hurry back into the market when you've been stopped out. Now, things are a little bit different here all of a sudden. So plan 1B. You want to have a plan for bear markets and corrections. And it's all about risk management, because during corrections and bear markets, you have volatility, which means a lot of upside and downside risks as the market bounces around. We want to expect the unexpected. You really want to trade what you see. I'll go into some detail in the next few minutes here. You don't want to fight the Fed, but more than anything, you want to watch what the market is doing in response to what the Fed is saying or doing. You don't want to fight that momentum. You always want to be prepared for volatility. You focus on capital preservation. And most of all, you want to build that shopping list, because eventually the market will turn up. You want to be ready when it does. Always trade in those small lots. Focus on your stocks relative to the market. If your stocks are doing well and the market is not, keep your stock. Again, shorten those time frames because of volatility, and shorten those sell stops to 3 to 5%. And the key is to survive another day. Now, the news cycle is an important part of what goes on during corrections. And so we want to look at the cause and effect. For example, yesterday's news, the Fed was going to accelerate taper. There's a new virus in town. So what we see is the small cap stocks were trying to consolidate. They took a huge hit down here. Okay. Now, today's news, fewer jobs than expected. New virus may not be so bad. Questions about the Fed are, what are they going to do? Are they going to continue that taper, or are they going to slow things down and not taper? Bottom line is you have volatility. The market opened up today on December 3rd higher because the predominant news was about the Fed maybe not tapering. But as market action progressed, we're still stuck in this area here. We're not sure as to what's going to happen next around the 200-day moving average. Now, looking a little bit more closely at things, the market is now oversold. Look at the RSI here, 30 for the small cap index. We're still having some consolidation here. The short sellers are still not giving up the ghost. And look, unbalanced volume is a little bit scary because it looks like some people are selling. So keep up with the news and see what the market is doing. Next, as always, look at the market's breadth. Quick review, chaos zone below the 50 and 200-day moving average. Bad news. Complexity zone above the 50, 200-day moving average. Good news, good market. Edge of chaos, area between 50 and 200-day moving averages. This is where things happen. That's where the cauldron is. That's where the next market direction is going to come from. So where are we? New York Stock Exchange advanced decline line was very oversold. We had a reading of 30, below 30 on the RSI. It was outside the lower Bollinger Band, came back in. Now it's starting to rumble around a little bit. So the key here is, have we made a momentum low right here? If we have made a momentum low, then this RSI trough will be higher and the market will take off. So that's the key here. What's the market's breadth telling you? Are we finally making a bottom or not? And the answer at this point is we're trying to do so, but we're not sure yet. Now, the next thing is, what is the options market telling you? That's where the VIX index comes in. This is the VIX index here, volatility index. This is the S&P 500. Here's the key concept that's difficult for some people to understand, but I'm going to make it simple for you. When VIX is rising, there's heavy put volume. There's heavy put volume, there's heavy selling. So as you can see here, as the VIX has been rising, the market has been dropping. Now, if the VIX is settling down, we have the market that's trying to find a bottom. So what the options market is telling you is that, again, we're trying to figure this out. We may be putting in a bottom. So go and see what breadth is telling you. We're trying to put in a bottom, and the options market is confirming that. Now, the key then is you compare your price action in different sectors. We have a couple of quick ones here. This is the home builders ETF over here. We can see that it is faring much better than the basically the restaurant, the healthcare ETF or the pharmaceuticals. And if you were going to buy something here, you would look at the home builders over the pharmaceuticals. And again, we're trying to confirm this. Accumulation distribution is trying to turn up. It means that there's some short covering. Unbalanced volume is not quite turning up yet, although it's in better shape. So that means that some people are selling, but some are holding on. So again, we're still trying to make up our mind. RSI is kind of an interesting thing here. It only went down to 50 for the home builders, meaning that not that many people sold on this decline, and then the short sellers were not very successful. And down here, we had huge selling in the pharmaceuticals, and they're trying to make a bottom right now. Bottom line is, if you are going to make a long investment at this point, you might want to consider doing so in the home builders over the pharmaceuticals. So to recap, the macro background, you got to watch the Fed. The taper goes on, the algos say bad news. The Fed changes its mind, the algos say it's good news. There's a new virus in town, it's bad news. But then the next day, maybe it's not so bad. Things are going to go crazy with the news cycle. In other words, new day, new direction. Look to your charts to help you decide what's really going on. So in the end, what do? You have your plan in place, and you give the market as much time as it needs. Make sure that those key, crucial chart points and chart requisites are met. Stay patient. You look for that relative strength. Remember, home builders at this point look better than pharmaceuticals. Before you trade, watch what the market does. The market can open up on a day and then close down several hundred points. You know, you can't be putting in your money in a market like that. However, if you want to go long market, you might want to consider an out of the money call option with at least 60 and 90 days prior left to expiration in areas of strength. And if you buy stocks directly, you certainly want to buy small lots and use tight sell stops. Well, that's all I have for today. I'm Joe Duarte from JoeDuarteTheMoneyOptions.com. If you like what you heard here today and saw, please consider a free trial to my website, JoeDuarteTheMoneyOptions.com. Pick up a copy of my brand new book, Options Trading for Dummies, now in its 4th edition, and or the Everything Investing in Your 20s and 30s book. Always remember, trading is uncertain. You have to be prepared.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.